Hello everyone, this is Dan Hussey from ElliottWaveForecast.com, and I'm bringing you a video on a more complex and a little bit harder to grasp trade entry I use. Now, all of my trade entries I use a simple Fibonacci retracement, and I have it set up in a way to highlight what I look for, which is simply white line, 50% line is entry, 61.8 line and 65% line. Those are where my stops are placed below those levels. And the negative 23.6 line is my target. So in the prior video, the Getting Free video, we looked at the swing from the 27.45s to the 52 high Fibonacci pull. It was a great entry point for the euro at a 131. First targets were hit at the 38.2 line, trade got free, and the trade continued on to its target of the negative 23.6. Something interesting happened, however, and the market continued through the target and all the way up and into the negative 61.8 line, which is important because typically speaking, when a market, after a Fibonacci pull like this, when a market breaks through its targets, we've entered into overtime for a swing. And when overtime occurs, sometimes the market can just keep running and running and running. This is what we refer to as an extension, and sometimes in Elliott Wave, these extensions are referred to as your Wave 4 pullbacks, and it creates a cascading effect. I'm going to now switch over to the S&P 500, specifically the daily chart, and we'll come back to the euro in just a moment. This is a chart of the S&P 500 from its 666 2008 lows to today's high. Now, there was a magic level, the 800 pivot. There's actually a high that occurred, and it's right here on this chart at roughly 802. There was an extension long that was drawn, and now extensions are drawn from highs to highs. Okay? So there's an extension that used an anchor of 800 for its pivot, or for its fib, excuse me, lower fib pivot. And its entry point was at an 880. It of course continued to and through targets. The following year, if you had left the lower fib anchor where it was and pulled to the next year's high, the next in the series of extensions, the cascading effect that extensions create, the next entry point was at a 110. It continued on to its 113.16 targets, and the next year in 2011, had you pulled the anchor up to highs again, the next entry point was your 10.88s. Of course, at this point, the market has now blown to and through its targets without pulling into the next in the series. And so now from we have a new high to high extension on the S&P 500 that has a potential pullback if we get that larger pullback for that daily swing all the way down at the 1572. We're not really concerned with that right now. I'm just wanting to show you how an extension, once a market moves into extensions, how it moves. And the S&P 500 from its 666 lows using the 800 anchor, it was a perfect example of same anchor new high 3 times in this series of extensions, how the cascading effect of pulling same anchor new high or low, if this was a short, occurs in the marketplace. Alright, we're going to go back to the eurodollar now. So that we can take a look at a potential extension long, which of course is in the direction of a much larger swing towards a 141, which is this larger long. But most importantly, what we're looking at is the fact that the 131 long has gone to and through its targets. Now what we're pulling on the euro is drawn from the high of the 34.52s. This is the high of the prior pull, the one that blew through its targets, all right, at 136.20. We're pulling up to the new highs, and you can see how now going down to a 4-hour chart, you can see how the 134.52 anchor to highs is getting a reaction at its 50% line. So this trade has actually been taken for subscribers of Trade Alerts. We had a 134 or 136.45 entry. The stop was a 135.90, just below the 136.61.8 line, and our target is a 139.15, a little bit of a front run of the target at 139.20s. We're looking for a 138 or 36.80 to 137 first profit objective. In other words, to get free on this trade, it works no different than what we call that traditional pull from a low to a high. Extensions work in my setups the exact same way. You buy the 50% line, your stop is below the 61.8. We will take half the position off at the 38.2 on a bounce back towards that level. And our main profit objective is a 139.23. We call this first target trading, or T1 trading, where our T1 is the 38.2 and our T2 is the negative 23.6% lines respectively. Now, the other method of scalping here can also be just buying 50% lines and taking them to that T1. There's a high probability that all 50% lines you can find in the market will get a reaction towards that 38.2 line. And there's a reason we use those levels every single day in order to try to objectify and find levels of trading and scalping in the market. Going down to a 15-minute chart now, I'm going to kind of scale back and take a look at, because trend occurs on every time frame and we were looking at a 4-hour trend, there was in fact a 15-minute trend here on the euro, an extension drawn from the 137.05 high to high, and you can see how this traded once from entry to target, and how the first time this level traded there was a reaction to its 38.2 line. The trade still worked out and we went to target. Now, same anchor, new highs. Once targets were filled, traded again. And you can see how the 50% line here at the 137.64s got a reaction. And the initial reaction was right into the 38.2 line. It was even more so. We went into new highs. This trade eventually failed, and upon failing, we actually had a reversal setup. But that is, I'm going to save reversal setups for the next video. So, like I mentioned before, extensions are a little bit different. They're not drawn from lows to highs like what we call traditionals are. They're drawn from highs to highs or lows to lows. In this case, on a smaller time frame, there's the potential for extension shorts here on the euro. In other words, drawn from a low to a low, because there was a series of traditionals off the highs that then blew through targets, and there's the potential for the extension now. Either way, we know that there's a potential for micro shorts, extension shorts, as well as 4-hour extension longs. And these two trends will compete with each other, and only one will win out. Okay? So these extension shorts have the ability to actually break the euro down here, and only time will tell to see what happens. But ideally, and of course there are other shorts that could potentially take the euro lower, but ideally this 4-hour swing is going to get the reaction we need to be able to get free. And that's what we're looking for now. And you can see how the bounce has started to occur from this 136.40 area. All right? Have a great day, everybody, and we'll be back with you as price action develops.